Hey, everybody, and welcome to this week's Ag Commodity Corner Plus podcast. It's August the 1st, 2025. As you guys can see, today, or rather this week, it's just me doing the podcast. Mo's on holiday this week. He'll join us next week. It's been a pretty big week as far as the financial markets are concerned. The topic for this week's podcast is the August 1st tariff deadline, and also we'll be looking at the weather issues or non-issues for the grain markets. Let's start by looking at where markets closed this week. As you guys can see, a lot of red on the screen for the grains markets. Some of those weather risks that were teased over the last couple of weeks, those fizzled out, and canola still continues to be supported by weather issues, but otherwise it's, like I was saying, a lot of red on the screen. Looking on to the livestock side, cattle continues to be the leader, and it continues to be doing what it's been doing over the prior few weeks. Another strong week for cattle. And if we go and look at the other leaders over the last couple of weeks, which have been the stock markets, they sort of sold off towards the end of the week after hitting record highs, though. Like I was saying, today is tariff deadline day, and we'll get into some of what has been announced as far as tariffs are concerned. No better place to start than there. And as you guys can remember, as far as U.S. tariff deadline day is concerned, it's as of today. And some of those countries have agreed to trade deals with the U.S., including the big ones, EU and the U.K. China, and we'll get into the latest developments as far as China is concerned. But the ones that are remaining to agree to trade deals with the U.S. are Canada, Mexico, India, Australia. Canada, the tariff rates on Canada, supposedly on goods that are not covered under the USMCA, they were hiked up from 25% to 35%. Mexico, though, got another 90-day pause on tariffs. We could have Canada and possibly other countries also getting pauses to tariffs as we go through the rest of the day. But nonetheless, markets, though, reacted to the tariff situation. And also, there are new tariffs that have been announced ranging from 10% to 50%, depending on the country and also depending on the sectors. There is also a 40% transshipment tariff, that was announced by Trump on goods that would be transshipped, supposedly, via other countries in the effort of escaping original tariffs. Like I was saying, the big elephant in the room is the tariff trade deal with China. There were discussions that happened this week in Stockholm between Besant and the Chinese negotiation counterparts. As of now, it looks like there could be an extension to the pause, which ends on August the 12th, but Trump has to sign off on it. There again, uncertainty could continue till August the 12th. Nonetheless, the new norm seems to be 10 to 20% tariffs, U.S. tariffs on goods that are imported into the U.S. for almost all countries. From there, looking at the weather situation as far as the U.S. is concerned, it has been a wet month for most parts of the U.S. Midwest, especially towards the west, and also large swathes of the east as well. What that means is that the current drought situation, this is the latest U.S. drought monitor map. As of now, it looks like about 8.5% of the U.S. Midwest is in any kind of drought, and that compares to almost 30% last month, or rather towards the end of June. So due to all of that, a lot of those weather risk premiums have actually evaporated, if at all they were there, have evaporated from the grain markets. There were murmurs, or rather, the deratio did affect some of those regions. There was a deratio forecasted towards the earlier part of this week, and it did impact some of those farms, but eventually turned out to be more or less a non-issue. Also, don't forget to try our program for free. This week we spoke about, like I was saying, some of those weather risk issues for the crops in the U.S. and also in North America. We also looked at the latest biofuel policy and how that might impact some of those balance sheets. Again, looking forward to you guys joining our marketing club. Like I was saying, it's been a big week for the markets, and one of the reasons was because some of those central banks had their rate decision meetings or announcements this week. So Bank of Canada kept their interest rates unchanged at 2.75%. Bank of Canada sees underlying inflation at 2.5% as of now. And the big one, the US Fed also, as expected, did nothing with the interest rates. That too continues to be within a range of 4.25 to 4.5. But as of yesterday, the expectation was that we might not get a rate cut even in the September meeting. But today we had the jobs report, the U.S. jobs report, which came out worse than expected. And not just that, there were revisions to the prior 2 months as well, which were also, and eventually, the jobs report for those months had to be reworked, and the numbers turned out to be worse than expected again. What all of that means is that as of now, it looks like in September we could get a rate cut. The chances of a rate cut have spiked from almost 15 to 20% to about 60 to 80% as of now, that we could get a rate cut in September. Moving on, and it's been the earnings season for the US and for the US corporates. So as far as tech is concerned, the markets were looking forward to what the tech had to announce for their AI commitment. What they did was all the big boys in the tech sector, including Amazon, Meta, Microsoft, Google, Alphabet, they have increased their commitments for AI investments from the earlier figure of $325 billion to about $364 billion. AI continues to lead the market, and this week we had NVIDIA hit record highs. For a while it traded above $180. And today has been a correction day across the stock market, so it gave back some of those gains. Looking at the livestock side, cattle markets had a strong week, and we continue to be at the lowest in recent history as far as U.S. cattle inventory is concerned. But on the bearish side, the latest cattle on feed report did show slight expansion that may be taking place in terms of the cattle inventory. But by the time that beef production hits the market, it could be late 2026 or possibly 2027. If you're a farmer in Ontario, don't forget to join our Ontario Yield Tour for the year, and also to join our events at the end of the tour. I will leave the link for that and also the link to our program in the description below. Thank you for joining us today. Have a great weekend, and for Canadian viewers, have a great long weekend, and see you guys next week. Bye for now.